Topic 1. U.S.-Iran tensions show no quick resolution, and executives warn the Iran war will reshape global energy markets. Citi warns oil prices could climb if U.S.-Iran talks remain fraught. Summary, 3-4 lines. U.S.-Iran conflict shows no sign of quick resolution, and a Strait of Hormuz blockade has severely disrupted global oil flows, removing nearly 1 billion barrels of capacity and threatening about 1/5 of prior seaborne trade through the strait. Ongoing military, trade, and sanction escalation keeps uncertainty high. A previously agreed temporary truce is fragile amid recurring clashes and strikes. Oil and gas CEOs warn the crisis will fundamentally change the global energy system, spurring diversification of supply, higher strategic stocks, and renewed investment in exploration, production, and low-carbon infrastructure. Citi says oil could spike further if talks stall and keeps a near-term Brent forecast of $120 per barrel. Details, verbatim content translated. The U.S.-Iran conflict shows no sign of being resolved in the short term, and a blockade of the Strait of Hormuz has inflicted serious damage on global crude oil supplies. The war and closure of the strait have cut volumes approaching 1 billion barrels, and before the blockade, about 1/5 of the world's oil passed through that strait. Political, trade, and military tensions persist, with sporadic clashes, U.S. strikes, and sanctions continuing and creating major uncertainty. A temporary truce agreed a month ago is endangered by frequent clashes and offensives. Major oil and gas CEOs warned that this situation will fundamentally change the global energy system and prompt policies prioritizing energy security. Countries and companies are pursuing supply diversification, rebuilding strategic reserves, and ensuring infrastructure redundancy, which will likely boost exploration and production investment. Deepwater and offshore fields in underdeveloped regions like parts of Africa become more attractive, and low-carbon areas such as nuclear, geothermal, and grid modernization will continue to attract capital. Market impact. Overall, analysts judge that the oil market has shifted from an expected surplus to a substantial supply deficit. Citi warned that if U.S.-Iran negotiations remain difficult, the risk of higher oil prices rises, and it maintained a short-term, 0-3 months Brent outlook of $120 per barrel, with scenario averages of $10 for Q2, $95 for Q3, and $80 for Q4. China's recent reduction in imports, about 2.4 million barrels per day lower, provides a short-term buffer. A secondary effect is the growing strategic importance of U.S. crude. U.S. oil exports have hit record levels during the war. If the conflict drags on, higher than normal prices and a sustained policy and investment shift toward energy security are likely. Topic 2. Tech and semiconductors are hot. Memory stocks rally. Micron up nearly 38%. AI chip interest is broadening beyond NVIDIA to Intel, AMD, and Micron, and Intel jumped on Apple chip deal reports. Summary, 3-4 lines. Semiconductor and tech stocks surged as memory shortages pushed Micron up about 38% for the week, nearly 84% month over month, closing Friday at $746.81, and a market cap near $840 billion, marking the strongest weekly performance since 2008. DRAM and NAND price and margin spikes, plus massive hyperscaler capex, have positioned memory and storage as core AI infrastructure demand drivers. AI demand is broadening beyond GPUs to CPUs and memory. AMD jumped roughly 26% for the week. Intel has staged a strong rebound, more than 200% year-to-date in some measures, and reports of a preliminary Intel-Apple foundry agreement sent Intel sharply higher. But some analysts warn of bubble-like valuation excesses. Details, verbatim content translated. The semiconductor and tech sector rallied sharply. Fueled by memory shortages, Micron's stock rose about 38% this week, nearly 84% over the past month. It closed Friday at $746.81, with a market capitalization around $840 billion, marking its